Hey everybody, Jim Hiles here, First Capital and Go Plan 101, and I hope you are fine and your family is fine, and please be safe as we go forward through this unprecedented issue of coronavirus. Focus on getting to the other side. The other side of darkness is light. That's a great quote, and that's what we're going to be doing here. We think, let's not go panic mode and run for the hills here, and we don't think it's going to be that horrific. Could it be a 2008 type of experience? Yes, even if it is, we're going to be planning for it, looking after your money in case it happens. And we're doing things already to hopefully protect, or we can come in later and take advantage. Things can get messy before they recover. And we've just seen the CARES Act come out and this huge stimulus packages that are being put upon the world. So we're not sure how that's all going to work out yet, but it needed to be done just to create a positive, confident, understand what separates success from failure. And these are some of the tried and true principles of investing. We are keeping stocks that we like and sectors that we like that are really designed to be a long-term hold. So a portion of the portfolio will always be invested, because the best way to invest long-term is to stay in the market and ride these ups and downs out. This too shall pass. We shall persevere. Watch the CARES Act video that I did. It's a long one, so it's about 9 minutes or so, but get a cup of coffee, hang in there. And if you want to learn more about at least the highlights of what I learned in the CARES Act over the weekend, things must be kept in perspective. This is the S&P chart. This is actually a 12-month look back. And if you kind of follow this chart from here on the left side, we're not that far down from a year ago at this point. Now, don't get me wrong, this drop was the fastest on record. It was one of the steepest on record, if not the steepest on record. And it went all the way down to a negative 33% rate of return. What do we think about the market, the S&P, the stock market going forward? One of the things we need to be careful of is getting over exuberant about what has happened this week, and 10% down day, 10% up day, and so on and so forth. We think that the bottoming in the stock market generally is a process, not a point in time, and generally not the first point in time. So I throw this chart up here. This is the S&P looking back and through at least the history that I've studied, that I've been living in, and you can see what goes on from time to time. These are 1974. We had a horrible market crash as well. 73, 74 oil. I wasn't there, but I wasn't participating anyway. To be careful to assume that the worst is over. We don't know if it is yet. So I'm just cautioning everybody to say, hey, wait a minute, be prepared, because when you look at each of these, 1974, 1981, 1987, 2001, 2008, 2011, and now 2020, we had what we called a retest of the market bottom. In easy language, we weren't finished going down yet, because there's still a lot out there we don't know about the virus, about what it means to the markets, what it means to society in general. So be very careful here. And with all of the money that's been put into the markets, this should be a really good opportunity at some point in the near future. So we're looking forward to those days. I'm sure you are too. If you have any questions, please feel free to reach me. We are here. Stay safe, stay well, and we'll talk to you soon. Take care.